as per the new Companies Act 2013. So here there are the major things which you need to focus is one is P&L, other one is balance sheet. So as per section 129 of Act, the company's annual general meeting, it is mandatory the board of directors should lay down these statements before the company. So what are the statements which is mandatory is one is P&L, the other one is balance sheet, and also as per accounting standard 3, you need to prepare cash flow statement also. So here the schedule of 3 of Companies Act, Schedule 3 of Companies Act 2013. So there are few features which are considered in Schedule 3. The first one is vertical format. Earlier you can see it was horizontal, but now it is a vertical format which is being shown, and it consists of the balance sheet also. And then here instead of schedules, earlier we had schedules, now it is representing with notes. And then we have the debit balance of it also consider the miscellaneous expenditure, but it does not give the appropriate disclosure for miscellaneous expense. And we have reserves and surplus, etc. So here you can see the statement how it is prepared. So this is the statement which you can see. So the profit and loss account, part 2 of Schedule 3. So the first you can see is the revenue item. This is the format. So mostly you can expect this kind of questions, because preparing financial statement is also one of the important topic which everyone should need to know. So here you can see there is revenue from operation. So revenue from operation is nothing but your sale. Whatever the sales you do, that you can record under the head called as revenue from operation. And apart from connected to your business, the income, you will put it under revenue from operation. And apart from that, if you are incurring any other incomes, you can bring that under other income. So when you add the point number 1 and 2, you get your total revenue for that financial year. And then there are expenses which you need to deduct. Well, first one is, this is the format. You cannot change the format. Mandatory, you need to know this format. So the cost of material consumed, then purchase of stock in trade, which means you might have opening stock and you will also have a closing stock. So any difference you can bring that under purchase of stock in trade. Cost of material consumed, you can material purchased, whatever you can bring under that head. Then changes in inventory of finished work goods. Sorry, here the changes will come. The closing stock and opening stock. In purchase of stock in trade and cost of material, you can enter the if it is mentioned with the cost of material, you bring under the head called cost of material consumed. Or generally, if it is as a purchase, you can bring it under the purchase of stock in trade. Then employees benefit. So under employees benefit, all your salaries, whatever paid to the employees, on all your administrative expenses, you can bring under the head of employees benefit expenses. Then you have financial cost. So it is only on the financial, like interest on debenture, the loan, financial cost, interest on loan. So all those items you can bring under financial cost. And depreciation and amortization expense. So any depreciation over the period on machines, plant, or anything you can bring. Apart from that, any other expense are there which you cannot fit in any of the above cases, you can bring it under other expenses. So you get your total expense. From that you get when your income minus your expense, you get a profit before your extraordinary items or exceptional items. Then after that you need to minus your tax expenses. So if there is any tax, you can deduct that, and what you get is profit after tax. So this is the format we follow when we prepare a P&L. So this is as per, so in question they can of Schedule 3 means if it is mentioned like that, it is nothing but you need to prepare a profit and loss account. So this is the format of P&L. So and next is balance sheet, that is a part 1 of Schedule 3. So these two are mandatory in a company. Every company should prepare these two statements. One is P&L, other one is balance sheet. So here you have the major three area items. What we have is assets. So assets means which is the events which you expected to flow from the enterprise, and liability means which is which leads outflow of resources. Say for example, you are making a payment or anything like that, outflow of statement. And equity is the residual interest of an enterprise after deducting all your liability. So we have seen equation asset is equal to liability plus equity. Likewise, asset minus liability, which is nothing but your equity. So here this is the format of the balance sheet, and this is also default. You need to go only with the format. You cannot change the format. At least inside, if you are not able to know main headings, you need to be thorough. So the first is equity and liability. Under that, you have first shareholders fund. In shareholders fund, you record all your share capital, any reserves, general reserve, revenue reserve, debenture reserve, redemption reserve, any reserve you will bring under reserves, including your current year profit. Then money received against share warrants, if anything is there, you can add that. Second one is share application money pending allotment. So any pending share application, any pending allotment is there, that you can record there. And a third one is non-current liability. So non-current means which is more than 1 year. So under that you have long-term borrowings. So nothing but you can bring your debentures or any long-term loans. All those things you can bring under long-term borrowings. And then deferred tax liability. So which means your tax, there is a difference between the tax proposed and the tax what you are paying. So in that case, if your liability is more which you have to pay, then it comes under deferred tax. Then other tax called long-term liability and any other long-term provision. If you have created any provision for any particular provision for not doubtful debts, any provisions on reserves or any reserve provisions you are creating for a long-term purpose, you can bring under that head. And then current liability. Under current liability, you have various category. One is short-term borrowing. So over a short period of time, which is nothing but your less than a year. Trade payable, nothing but your creditor. So any creditors are there, you can record. Other current liabilities. So apart from that, any bank loan or anything, apart from that, any other loans you can bring under current liability. And short-term provision is provision for tax you created, provision for doubtful debts are you created. So all those things you can bring under the head called as short-term provision. So when you add that, you get the liability side total. Moving to the asset side, there are first one is non-current asset. Under non-current asset, you have fixed asset. Fixed asset, in that way multiple character difference are there. Tangible asset. So all your fixed natures you can bring under tangible asset. And then intangible assets, which nothing but your goodwill, patents, copyrights, all you can bring there. Capital work in progress, any other work in progress, any item which is still in progress, you can bring under that category. And intangible assets under development. Say for example, software, there is some software development you are doing, but it is still not yet completed, still is in the progress. So one way it is going to be an asset to the organization, you can bring under that category. And non-current investment, it's a long-term investment. If you have, you can bring under that. And deferred tax asset, same reverse of that. So if you created a provision more and the tax is less than that, that is deferred tax asset. And long-term loans and advances, if you have lended any loans and advances, you can bring under long-term, which is more than 12 months period, you can show under that. And other non-current assets, if anything, you can consider bring it under the head called as other non-current assets. And under current asset means which is only for less than a period. So under current asset, you have current investment, inventory, trade receivable, cash and cash equivalent, short-term loans, other current assets. So this all item you will bring under the head called as current assets. So basically, if you see in your balance sheet, in your liability side, you have four subdivisions. One is a shareholder fund, share application money pending, non-current liability and current liability. In asset, if you see two major head, one is non-current asset, other one is current asset. So you need to know these are the main category under which we calculate we prepare a balance sheet. So you can see here what are the item given under share capital. So in share capital, if you see the number of share issued, the par value per share, usually there are shares issued at par, issued at premium, issued at discount. Par now mostly not discount, more is premium. So par means 100 rupee share I am issuing at 100, whereas premium means 100 rupee share which I am issuing at 150, and discount means 100 rupee share which I am issuing at 90. So like that. So call unpaid. So still now the call is we called for the shares to pay, but it is not being paid. And forfeited share means the shares are being cancelled. We have given 3 notice asking them to pay the balance money. If the shareholder is failed to do, the company have an authority to cancel the share. So that cancellation, once shares are cancelled, that is called as forfeited share. And next is reserve. Under reserve, you can see lot of reserves are there. Capital reserve, capital redemption reserve, security, any security premium. So if shares are issued more than the par value, then if there is any share premium, that you can bring under head, debenture redemption reserve, revaluation reserve. So there are different category of reserves. So all connected to reserves you can bring under the head called as reserves and surplus. Apart from that, your current year profit which you have incurred, that also you can bring it under the head called as reserves and surplus. Next is long-term borrowing. Under long-term borrowing, you have bonds and debentures. So any debenture or bond you can bring under that. Any term loans, any deposits, deferred payment liability, loans and advances. So this all come under long term. It's nothing but when there is a loan which we have taken or for a longer period of time, then in that case you can bring it under long term provision. And long term liability. And long term provision is here employees benefit provisions like provident fund, gratuity, those things you can bring under the head called as long term provision. Short term borrowing, here are the same loans which has been given for a short term. Any deposits or any other item you can bring under short term borrowing. And other current liabilities, if you see income you received in advance, unpaid dividend, the dividend which is not being paid, and interest accrued but due on borrowing. So these items you can show under current, which means it's still the settlement is not done. Over a short time period of time, any item you can show under current liability. Then tangible, we saw anything which is fixed, movable or anything which you can touch and see. So land, building, plant and machinery, all these items you can bring under tangible. And intangible is goodwill, trademarks, computer software, mining, publishing right, copyrights, licenses, all will come under intangible. And non-current investment, so any investment in equity, preference share, government securities, any investment in bonds and debentures, mutual fund. So all your investment which you have done, you can bring it under non-current investment. Then long-term loans and advances. So here any secured loans you have got, other loans and advances related security deposits, this all which from our end we have given to anyone, then that is an asset for us, so you can show that. And current investment, there are small terms of investments like preference, government securities, bonds, or less than a period, 12 months, you can bring under that. Then under inventory, you have these many items: raw material, work in progress, stores and spares, finished goods. This all will come. And cash equivalents is balance with bank, check, draft, cash in hand, other items. So these all items you can bring it under the head called as cash and cash equivalent. So now there is a sample question given for you. You can see this question. The following is a trial balance of Alpha Limited. So there is a trial balance given. So some items on the asset and liability is given. So the total is 33,400. Now the authorized share capital of a company is 8 lakh share of 10 each. Then the company on advice of independent valuer wishes to revalue the land. So the land is being revalued at 72 lakhs. Then declare final dividend at 10% on 2nd April 22. So the dividend is being declared on 2nd April of 2022. Then suspense account of 80,000 represents cash received for sale of some of the machine on 1/4/21, and the cost of machine was 2 lakhs and the depreciation accumulated is 1,60,000. Depreciation also to be provided on plant and machinery, 10% on cost. So these are the adjustments given in the question. You are required to prepare a balance sheet on 31st March 22 and the statement of P&L with the notes to the accounts for the year end as per the schedule 3. Ignore previous figures and taxations. Okay. So it is given like this, and we need to prepare the balance sheet as well as the final accounts of the company. Okay. Yeah. So here you can see. Before going to that, first let us do the revenue statement, because first we prepare revenue P&L, and then only we will go for balance sheet. So the first is revenue P&L. What is the first item we discussed? Revenue from operations. So revenue from operations, second head is other income. So when you total up, you get your total income. In that you can minus. There are list of items given. One is cost of material, second one is purchase, then finance cost, any other items you can minus, and if there is any tax you can deduct. So let us prepare first the revenue from operations. So what is revenue from operation? You can see here in the question. Revenue from operation.
Done.
Remember the four major components. One is shareholders fund, second reserve, third one is non-current liability, and fourth one is current liability. That is the procedure. Okay, so here you can see the notes they have worked out, because directly when I show that you will not understand. So I am showing here. You can see the equity authorized. See the question. The authorized capital of a company is 8 lakh shares of 10 each. Authorized capital means that is the maximum capital the company can raise. After that, the company cannot raise fund from that. So that is the maximum capital the company. But as per balance sheet, that is a maximum limit. But we are issuing a equity share capital of 10 each of 6,000. So you can see in the balance sheet, equity share capital 6,000. Okay. So this is the first working note. So in your balance sheet, the first one, can you see here, 6,000 rupees share capital first. Second is reserves and surplus. And so it is, don't do all the working inside. So that is why we have separate note. So it is mentioned note number 1, shareholder fund, reserves and surplus note 2. So in reserve and surplus, you can see what are the items you can bring it under reserves and surplus. So you have general reserve, you have previous year profit and loss, and you also have the current year profit and loss. And is there any security premium that you can bring under this category? So you can see here under reserves and surplus, security premium, then there is a general reserve, there is a P&L. P&L, the previous P&L which has been given inside the statement. So that is 1,440, and the current year profit we are adding 4,760, and there is an interim dividend given that also will come only under reserve. So you are minusing that interim dividend 360 from that. And third one is long-term current liability. So you can see here long-term current liability, there is only one item which is called as debenture. In the question you can see here, if you have your working notes, you can also keep it with you. So easy for you because it takes time for me to scroll up and down. So here debenture it is given 4,000 rupees. So you are recording debenture 4,000. Okay, so from that you get your total of that. Then current liability is what are the current liability given in the question. Here in the current liability there is a trade all your fixed asset you can bring under non-current asset. So you can see here land is given 4 lakh, and there is an increase. It is given in the statement. The land is being increased with 72 lakhs. You can see in adjustment it is given. The land has been increased with the company on the advice of independent valuer. It the river is to value. So there is a hike of already we